Thanks very much, and good afternoon. Sorry I'm late, just happened to be in the wrong room at the right time. Rockcliff Metals, it's an old story with a new start. The transaction that occurred in the middle of May, I think it was finalized, has brought to light some very, very interesting opportunities, and I'm looking forward to sharing with them with you today. I'll wait for you to read all of this, and I'm hoping you've read it before. The reason we ended up with private equity money in our company is that Greenstone, the private equity company, saw a unique opportunity in the VMS belt up in Manitoba to institute a relatively fast-to-market production play. And that was based around a couple of really interesting combinations of their money, Norvista's Acuna assets, which were the Tower Talbot, and the 7-year lease on the mill, and the Rockcliff extended series of properties for very high exploration potential, allowing for a hub and spoke method whereby within a few years from now, sort of 2.5 years from now, the potential is to have first copper to market. And that's based off of the drilling that was already occurred at the Tower and Talbot deposits, and we'll hear about one more that we've added to that since then. And then from the Rockcliff properties behind it, some longevity and growth potential, and that's why in funding that we'll talk about in a minute, there's a lot of money for exploration, in addition to complete studies that would allow us to get to market. As we said, to get to first production in 2022, we envisage completing the earn-in on the Talbot deposit from Hud Bay by the end of this year. It requires us to spend about another $2.1 million. We've got a 15,000 meter drill program that's currently underway there. We'll be notifying Hud Bay of our 51% and therefore operatorship of that property. They have some buyback rights that they'll contemplate at that point. So far, nothing's been exercised in the past. We'll talk about one which is very important for us a little later on. We're permitting the mill to go from a nickel producer, which is the Nickel mill in Waboden, to become a copper producer. All the technical work's complete. We're writing the reports. There's no issues there, and we've been advised that it's merely a notice of alteration to be filed with the ministry in Manitoba. All the work has been done on the Tower project. That's now in position to be applied for an advanced exploration permit, which will give us a 50,000 ton bulk sample capacity that we then transfer over to an Environmental Act permit subsequent to that. And at the Tower, at the Talbot and Rail, because we need a little bit of road construction there, that actually triggers the full Environmental Act permit. And we've now done the sampling on both the Rail and the Talbot projects that would allow that to stay on course for permit application to occur around about the third quarter of next year, and the potential of having those permits in our hand by the end of 2020, I'm sorry. The hub and spoke would expect us to be producing around 15,000 tons of copper a year starting up in 2022. And typical mine life on our size deposits at the moment would suggest we've got about a 7-year production life with the known deposit as we expect it to stand today without exploration growth. Clearly, once we're up and running, we'd at the very least need some replacement fairly close behind that, but our real goal is not to stay at 15,000. Around about the time that we'll be producing in 2022, we intend on publishing a series of studies that would show how we get to the 40 to 50,000 ton range in the 2 to 3 years subsequent to 2022. So 5 to 6 years from now, the potential for Rockcliff to be 50,000 ton a year producer, 40 to 50,000 ton. Very, very high, and we're going to show you why we believe that. And one key thing at that point, we'd no longer be able to push that all through the Nickel mill at Waboden, even though we'd have the lease for that because it's only a 1,000 ton a day mill. And we're going to talk to you how we get around 15,000 tons through a 1,000 ton a day mill in a little bit too. And one of the things that we like about the way the company's positioned is the jurisdiction we're in allows for relatively short permitting periods. Therefore, we don't burn a lot of working capital waiting to get to market on a permit. The second thing is all our deposits are very shallow, and I'm going to show you how shallow one of them is. So there's no long lead time to get into ore production, and because it's just ramp access, no shaft, and they're relatively short mines, there's no large camp buildings, there will be temporary camps. So the overhead capital on top of the mine is very, very small. So we think the capital intensity is very low for these projects and very high returns. And we think that's going to be, once the studies are published, a really favorable piece for us. The idea of us being invested in now, if you know our share price, we're hovering in the 8 to 10 cent range. We believe once the market can put value on us from additional exploration results. I don't know if you saw our results we published today on the first 2 holes at Rail. We'll come to Rail in a little bit, but we're anticipating more like that. And I can't see our share price staying roughly where it is now. And we've put together now the team with Ken Clay at the exploration helm. Chris Stackhouse has joined us as the CFO. He was with the whole Guyana Gold from nothing to where they are now, and has joined us to help us on a hopefully even better path than that one. And myself, I've been in the mining game a little while. The camp. If we have over here Flint Flon, over here Snow Lake, this red line across here is where the cover of limestone starts and extends to the south, no limestone to the north. And for the longest time it wasn't appreciated that there was potential underneath the limestone. And then as it became more and more apparent, Ken got ahead of the game largely. It's not that Tad Bay hadn't been down here, but I don't think anybody truly understood the full potential of what's available to us. And so the Tower, Talbot and Rail, in fact maybe we should go on now. Tower, Talbot and Rail is one of those mines will be our first producer. That's the way we're playing it now. And the idea is which is the best one for us. They're all going to be relatively similar, we believe, in grade and thickness. They're going to have their own ups and downs around that and reasons why we might want to go with one ahead of the other. Some are shallower, some are larger, some are closer to the mill, and whichever the best, fastest, cheapest one to the market that has the maximum return for us is where we'll go. So we're looking forward to giving the board a tough time and maybe asking for 3, who knows, but we'll certainly be asking for 1. The mill itself is in great shape. It was shut down in 2012 after a relatively short run spell. The tailings area, I don't think it even reached 100,000 tons of tailings in there. It's empty. I was up here in June, visited it, and asked the caretaker, do you mind if I see it'll start up? Because I saw one of the SCADA screens was actually live. It was powered up. I said, does it work still? So we started up we actually started up the baghouse on the crushing circuit, no issues. We started up a couple of conveyors, no issues. It was amazing, it's ready to run. And what we would be doing is looking at actually putting an extension on the flotation circuit, because our intent is to push about 15,000 tons a year of copper and concentrate out of there, and they were only pushing out 2,000 to 3,000 tons of nickel and concentrate. So there's a huge expansion behind because of our grade. They were only mining 1% nickel. Anyway, very, very nice facility, and it's basically ready to go once we've done our expansion piece. The geology is fascinating up in that district. The reason Ken got involved there originally, and the reason that Greenstone is coming now and back them, is that this chart, which is a Hud Bay chart, shows from inception how many tons did we know about when we said it was good enough to mine, and then when we shut down, how many tons did we actually mine, and there's a multiplier effect of over 2.5 times the amount of tons of mine compared to what they knew when they started the mine. There's a second thing that's useful to us, and I think you'll see in the packages we've got a bunch of deposits they're already in the 1 to 2 million ton range. Talbot 1 has a 4 million inferred resource to it. And the Talbot, if Ken's definition drilling that we've just kicked off proves up, if we get it into the 4 million indicated, Talbot would be the third largest deposit found pre-production. And we have conductor plates there that we would love to drill at some point, and the potential to grow Talbot beyond the 4 million. So we're very, very excited about the Talbot. Here is the Talbot. There's a bunch of data in here. I think the key point is we'll earn our 51% interest from Hud Bay by the end of this year. At that point, we become the operator of the mine according to the agreement. Depending where it fits in comparison to the rail and the tower projects, it'll either be the one we do the final study on with a recommendation to the board, or it won't. But assuming it is, as we spend money, Hud Bay has to either pay us back that money in order for them to exercise their clawback to a 51% owner. We become 49, where they'd be the operator. And if they did that, the only reason they'd be starting to pay out money is because they were now seeing the advantage of bringing it into production. We don't know what they'll do. They'll make up their mind. But if they do bring it into production, we end up with a 35% free carry. And so we will go on and build our own mine at that point and send it off to the mill. It's not an unfavorable outcome. Just may not be the sweetest, but it's certainly one that would actually increase our cash flow in the short term without requiring any capital. There's the conductor plates that I was talking about. There's plenty there to look at, and I'm going to talk to you about the importance of the conductor plates. We know in this camp that conductor plates can be pyrrhotite, they can be pyrite, they can be pretty things that got no copper or zinc in them. But once you start associating them a little closer to intersects that have actually had good, in this case, good copper with good gold grades, the likelihood of these ones particularly being extensions are high. These ones we don't know yet. And the Talbot particularly is a very interesting deposit for us. There's that limestone cover on top. It looks narrow vein, but this is 14 meters thick here. And down in this even thicker part, it ranges from 14 to 25 meters. These are just intercept lengths, they're not true widths. And we can't get true widths till we've got some data that we can do some modeling and calculate that. But the intercepts, very large, widths start to open up on this particular one. And you can see the potential for high rates of extraction from much, much larger stopes deeper down than where we would be on most of the deposits we have there, which are more in the 1, 2, 3 meter range, with averages closer to 2. But the grades in here are very, very high, and we've done some modeling to confirm up in the heart of this deposit an average of 5 meters with very good copper grades, very good gold too. Tower deposit, that's the one that sits right on the road. You literally drive over it. The power line runs over there. Cell tower sits on it, and hence the tower name. This one was a fascinating find. Ken will talk to you later about why it shouldn't be there and how the University of Manitoba is writing a paper on how did tower end up there, because the Thompson nickel belt is coming through down here. No one would have predicted a copper deposit like that to be there. So it's there nonetheless. And one of the things that our drill program is looking to do is increase the tonnage of that one. We're sitting at about 1.1 million tons in the 4% range. And we've got another target just to the south of the one we've drilled out like that. There's an additional 1.1 inferred as well, by the way, 1.1 million inferred at similar grade. But literally just to the south, 600 meters to the south, 300 meters of where we would envisage a portal going, actually. So the portal would almost split between the north and the south. The south has an anomaly, now that we've been able to filter out power line and cell tower interference, has an anomaly that actually looks like the tower deposit. And so Ken can't wait to get the drills on site, and I think we heard last night that we got our provisional permit for the drilling there, so we're pretty excited about that. I should have mentioned at the Talbot, we've already got 2 drills up and running on that inferred resource as we speak today. The tower, obviously Ken will finish up whatever needed to do to finish off the provisions, and then we'll be drilling at some point at the tower as well. What we particularly, and that anomaly we're talking about is literally just south of where we've drilled here. But what's interesting about that one is that that whole belt's never been looked at particularly, and at some point, once we've understood the early mineable resource, Ken will be putting some holes in the ground to understand what all this could mean for us. So the growth potential is there. We'll know later. The rail. When Greenstone did the financing, their interest was Tower Talbot. We know we can get to market, and thanks that Bucko mill changes the world. It's how you get speed to market. When Ken, Bruce Durham and myself, we toured this district in early June, and we looked at the whole geological resource base. One of the things that all three of us quickly came to is to reduce the risk on our portfolio, we have to add one more property. And we've added the rail. And the reason being is that this 800,000 odd ton of 4% copper equivalent indicated resource had this anomaly attached to it. And this anomaly had a drill hole right next to it put down by Hud Bay in 1962 of nearly 6% copper over a few meters. The results that we announced today, for those of you who don't know, Ken's begun to drill just down here, and he's about 225 meters down now below here. We're hitting between 7 and 10% copper equivalents over a few meters. It's very, very exciting. The extension of this from a 800,000 ton to potentially a 3 million ton deposit is now something that we can begin to see. The depth below surface is hardly anything, and no limestone. In addition, there is no First Nations treaty rights on the land above, and so no need for consultation as part of the full permit application. So we're very excited about the potential of this one being right up there with Tower and Talbot as a choice that we need to make. Our team, those of you who don't know me, come and speak to me afterwards. Probably most of you by now know Ken. If you don't, Ken's the one that put all these properties together. Chris Stackhouse is here, he's our CFO. We're pretty close to filling our project director role. That's got to now go build quite a few mines and get the mill up and running for us. Nice experienced board of directors. Shareholding as a result of the Greenstone piece. Greenstone had 42%. Novista, who vended in the Tower Talbot and Bucko mill lease, have got about 27-28%. And what's interesting, back over in the retail and others, so there's 90 million shares outstanding in that little portion. About half of them have been with Ken for Ken's life in this thing. And most of them I've spoken to like the team that's joined and don't look like they're going anywhere. So our free volume for trading is about half of that. And that leads to the volatility that we've seen in the marketplace, but it also leads to potential, once our story gets heard and how quickly we've got production coming to the market, there's no reason that shouldn't change. And I think that's all I have to say.
Thank you, Alistair. Alistair and Ken are around.